Hey everyone, this is Joel.
And Noah from the Wealth is Health podcast.
This podcast is a conversation of our journey to financial health.
We think working until 65 just ain't it, and just like you, we're trying to make sure that never happens.
And if you're interested in letting us know what you're trying to do to achieve financial health and want to join us in our journeys, join the discussion on our Facebook at the Wealth is Health podcast.
Let's tap in.
Hi y'all, welcome back to the Wealth is Health podcast. Joel and Noah back again. We're going to talk about some technical analysis today. So if you want to stay tuned for that portion alone, then just watch the only video. We're going to cut this video up into two segments like we did last time. So we'll just have the technical analysis only part playing after. But if you want to stay for the whole thing, if you're a real one and you want to hear what we have going on in our actual lives that are getting us to these points, we can put a lot of money into these stocks that we're going to analyze technically, then stick around for this portion of the episode. So I know last time we did talk about fundamental analysis, but a little bit later on, I'm going to talk about that technical side. First, we're going to get into these updates from the last week. You want to start? No, because I started last time, so you start now. Unless you just have
that was like our routine. That's what we did. But no, I'll start. It doesn't matter.
No, you know what?
No, I'm going to go now. This man wants me to go. I'll go, okay?
All right, so basically...
so what happened with... But yeah, so what was I saying? I think I said I was going to sit down with more lenders as my weekly goal. And I actually have not talked to a single lender this week. Oh, no, actually, that's a lie. Because I had that meeting on Tuesday when we were supposed to record. And I talked to a lender then. But I actually kind of changed my mind a little bit in terms of the weekly goal because... because I'm thinking about focusing on short-term rentals instead, I actually remembered, right? I actually remembered that I met a lender who has a short-term rental out in Vermont, and he has a similar mentality like I do when it comes to investing in real estate in general, even though short-term rentals is not really real estate investing, it's more hospitality business, but either way, you're still like acquiring a property. But yeah, so he was saying that like when he buys properties, like he owned at least one in like St. Louis, and I think he's owned like a couple more properties. But he's like, yeah, whether I own it in state or out of state, I'm still like building a business around it. Like I'm not gonna be the property manager. I'm not doing anything myself. Like I'm running it truly as a business. So that's why I would like to talk to him about it. See how it's going for him out there. Maybe he'll even let us see his profit and loss statement for the year.
Yeah,
maybe.
That'd be nice.
Because I want to know what those numbers are hitting like to see if it's a good move. But yeah, so if it sounds like he's actually doing well, it would be dope to work with him on the financing side. And that's kind of like incentivizing him to even like give up the game because I would be using him as a lender for that specific property. But yeah, like potentially even being able to use like his property management team, the realtor that he used for it, any like handyman or other types of contractors or whatever. Kind of just like plug and play, which would be fire. So we'll see how that goes. But we're setting up that meeting for next week. So both Joel and I can go. And then depending on what we hear, we might actually even just have him on the pod.
It should be fantastic. I'd love to see you here.
Yes, sir. So
the course... Go ahead. No, seriously. I was going to say the course, too, that I'm taking right now also goes into, like, crazy in depth. So I kind of wish I finished that course so I could compare it to what he's about to say. But either way, you can cross-compare at any point.
Yeah, exactly. But, yeah, so what I've been focusing on this week instead was I actually ended up buying another option trading course because... I actually did well with options.
Because you're making bread.
Yeah, I'm actually kind of making bread with options right now. Yeah. And I don't want to get like a big head and actually feel like I know what I'm doing because I know for a fact I don't all the way know what I'm doing. Like because when I hear other people like analyzing charts and getting into different trades or whatever, I'm like, I don't know what y'all are talking about. I don't see what you see right now, and I don't like that. Like it makes me uncomfortable. So I'm trying to make sure that I understand that more. But yeah, so I feel like I'm definitely going to do that whenever I have like what I consider to be like a bigger gain, maybe. And what I consider to be a big gain is probably going to change over time. But when it, like the ones that I just made, like the first one was, I turned 9,000 into 19,000 on NVIDIA. And then on SMH, I turned 14,000 into like 22,000.
I'm making that the cat like the I turned 9,000 to 19,000.
Yes, sir. Yes, sir. And that wasn't even a full clip. That was only half a clip because I didn't feel comfortable about my entry. So I was like, I'm only going to go halfway on this one.
That is crazy to me, yeah.
Yeah.
That is crazy. Wait, what was the time frame that you made that in?
A couple weeks. Like 3 weeks, maybe.
Crazy, okay.
Yeah. I can get the exact time frames after, but yeah. So I definitely just don't want to make sure, or I want to make sure that I'm not getting like cocky or anything like that. So back to the books, yo. Taking another course. Go ahead.
Yeah. No, I was gonna ask. So was when you were trading, like making that trade, did you plan on it being a long-term trade, and then it just happened to skyrocket, and you're like, all right, I'm just gonna take it out now?
That's exactly what happened. And to be honest, I'm not done with that with either of those trades. I'm gonna be trading in and out of those same positions over and over again up until probably like maybe late 2022, mid 2023, like that time range. But yeah, like, and that's what I'm saying even about those trades. Like, I basically just got lucky. That wasn't really a lot of skill. Like, all of a sudden, analysts just started raising their price targets for NVIDIA, and it just started running. And yeah, and then AMD is another semiconductor in the SMH ETF, and NVIDIA is also in there. So it's like I was eating off both of them.
What's it called? SMH?
Yeah, shake my head, bro.
SMH, yeah.
But yeah, so that's essentially what I've been focusing on. And just to say real quick, like what I've been learning from the course, it kind of feels like I'm basically just never gonna do short-term option trading. I'm not gonna lie, It kind of seems like it's not really worth it. Like, there's just so much risk, so much volatility, and like risk relative to the reward that I'm looking for, it's not really there. So when it comes to short-term trading, like I feel like the standard is typically like a 3-to-1 reward to risk ratio. So basically, wait, how does that look like? I'm trying to remember. But basically, like, 1 win covers 3 losses. But with the options approach that she has us taking, like, it won't work out like that. So it doesn't make sense. Short term? Yeah. Okay. Like, unless you have like a stop loss that's like really, really close. But you're probably going to get stopped out very often because options move so quickly. Like, it's so volatile. So it's so easy to get stopped out. Whereas when I'm doing longer term trades, like, I don't necessarily need a 3-to-1 reward to risk ratio because I'm buying so much time. Like, the options trades that I just got into, or just sold actually, didn't expire until 2024. So I don't, in my personal opinion, like with my strategy, I don't use a stop loss at the beginning, like when I first enter the trade. I'm just letting it run because I have so much time for it to recover. And as it starts like gaining profitability, I start locking in stop losses along the way to kind of trail it upwards. So that's what I do. But yeah, it looks like short term is not the move for me. So I basically bought a whole course to find out I'm not doing short term. But I will do short term when it comes to buying puts. So when you're buying a put, you're basically kind of betting that the stock price is going to go down. So the time periods where the market's usually tanking, that's probably the only time period where I'm going to be making like shorter term trades. And
you want to explain to like, yeah, you want to explain to everyone like what the stop loss is? Because I don't know if we've ever talked about that. It's a pretty easy concept too.
Yeah, I mean, I don't know if I'm going to be the best at explaining it, so you can chip in too, and they can also look on Investopedia. But it's basically like a tool that you can use to get yourself out of a trade. So some people might use it initially when they're first entering a trade because they might be like, all right, maybe I'll put like a couple thousand into this trade, but I'm really only willing to risk $200 worth of my money on the trade. So they'll put a stop loss in place to say, all right, sell my position if I start losing like $200 or more.
Yep.
Yeah.
So if it ever gets down to 800, it stops. And the reason it's so like, I guess like you were saying, it's so volatile in the options market that it could just go to 800 and bounce right back up to like 3,000. That's like ridiculous, but that type of
stuff like that happens. Yo, it's so annoying.
Yeah, that's crazy. That's actually crazy.
But yeah, so I don't use it like that in the type of options trades that I'm doing because I'm longer term. And what I'm doing, these are called leaps. It's an acronym, but basically a leap is an option trade that expires at least a year out. But I'm usually going like 2.5 years. Yeah, so I just like track my stop losses like along the way. So I typically do in like 20 to 25% increments. So for example, if I'm up 40% on a trade, I'll put a stop loss in to take me out if my profitability starts going like below 20%. And I just keep moving it up over time.
Yeah.
Yep.
Okay.
But I would say that's basically it for me. And then I basically already said what the goal was for next week. It was to sit down with that lender about the short-term rentals. So I think that's
and
it.
I'll be there to be nice, to see that in person. Okay, word. So for me, I have a few updates as well. I know last week I said I wanted to work on the branding for Wealth is Health. I do have like a concept that I created. I kind of want to see how it would look on a sweatshirt or on anything. Let me pull it up real quick. But basically, though, I don't really know. I feel like like the logo might be too minimal. No, it's the same one that I showed you before, and I came up with like a bunch of different concepts. So this is what it looks like. I'll show this camera here. This is what it looks like, and then no, this is what it looks like for you. Like those are all the different ideas I had.
Mm-hmm.
We went with this one. Went with this one right here. But I don't know. I feel like it's like very clean, but I don't know. Still on the fence about it. Not like wowed with it or anything, but I don't know, I'll make like a shirt and see how it looks, and then see how it goes from there.
Do an Instagram poll.
Yeah, literally. I'll probably just do an Instagram poll. But I don't have any other options. That's the thing. Like, I don't really want to do... That's the best one I have. So if I give people one option, they're going to be like, all right, obviously this is the best one, I think.
Okay.
Personally, but I also started doing some branding stuff for my own personal business, which I said I would do last week. So that went well. I came up with the same thing, like a bunch of different concepts I just drew out. This is it for you, Noah. This is it for everyone else. And these were just like concepts I just created, and I just didn't know like what the vibe I was trying to go for was. So I actually ended up scrapping all the ideas, and you can see on my sweatshirt, this is the idea that I went with. I posted on my store the other day. So this is the first version. It's embroidered, but it's not like the best embroidery job. Like they didn't do like the crazy best embroidery job, which is fine because I did it myself. So I'm going to try to create a patch today. Like after we record this podcast, I'm going to go back up to the place where you can do this. Make like a patch, which is supposed to be more, I guess, detailed, get some work done, and then as the patch is created, I can just cut it out and then put it onto a shirt or a sweatshirt like this, like way more precise, or just like sew it in. So I'll figure out how to do that later, but I'm going to do the same thing for Wealth is Health. I ordered a bunch of shirts and stuff for that, and the reason I'm doing this is because when I'm on shoots with people, I want to make sure that people know that I'm a videographer that they can use. So I'm going to make it very clear to people that this is my brand, this is what I do. On the back, I want to have like a phone number or my Instagram tag. Sorry, I'm so thirsty. Instagram tag, so people can like reach out to me.
I had a whole joke right there, and I just want you to know.
I'm glad you didn't say that. Yeah, I'm glad you didn't.
Yeah, I mean, I spared you right there. It was gonna be a callback to another episode too, but I'll just tell you after.
Yeah, keep that in your head. I want to know what you're saying.
All right.
But yeah, the whole point is for awareness. I don't really do too much marketing because the system that I'm trying to do is one that doesn't require too much marketing, because if I get too much work, I just can't fulfill it. But when I get to that bridge, I'll cross it, which is great.
You gotta start hiring stuff out, bro.
That's what I was saying. The problem, but I just don't know I don't know how I would do it. I don't know any videographers that I would trust to do as good of a job as I will.
They're not.
Or young. That's the problem, dude. And that's the problem. Like, I don't want to, like, in the initial phases of this business, I want to make sure I'm doing all the work, so that if I do ever bring someone in, they can like trail me or follow me to do this work, and then they can do it themselves. But that's like the scaling problem has always been something I've thought about, because I don't trust anyone ever to do the work that I'm gonna do. But I know you can't do it all yourself.
You should read the E-Myth.
The E-Myth?
Yeah, it stands for like the entrepreneur myth or something like that. But
does it talk about scaling?
Yeah. It's a really good book.
I will definitely read
that.
I
really like it.
I'm actually gonna write that down right now. Hold on. You know what? I think that was actually on my list of books to read. But either way, it was cool that I found out in my school center they have a place where you can print stuff out yourself. So I created like this like screen print like the same thing. So this is like a screen print of what the design would look like if I put it on. It looks cleaner, but it's not as.
I like the red too.
It's not as like I guess quality. Like it doesn't look as quality as if something was embroidered. Like if you have an embroidered patch, it looks more like official. But if I'm making T-shirts, who really cares? I'm on site. It doesn't matter. You can make these like really easily. And the good thing about them is I'm gonna get like a pack of like 10 just white shirts and then just put logos on them, and I'll just give them out to my clients who I have. Like, here, you work with me for subscription. Thank you. Take a shirt. You can wear it whenever. I don't really care. But people ask questions like, oh, you videography, whatever, blah blah. Oh, that's like, you know what I'm saying. So any way that I can get to have people spread this picture or just build awareness for the brand is kind of what I'm going to try to build in the next week. So that's kind of my update too for next week, because I'm going to get a bunch of shipments in. But I just want to finalize the design and make sure it looks good on like patches and everything first. The next thing, so this is a big thing for anyone who's watching the podcast who has their own business or is trying to aspire to make their own type of anything. Contracts and stuff are super important, and there's stuff that I knew were important, but I didn't know how to really set it up. The reason I'm saying is because when you start getting bigger and you start working with people who aren't your friends, even if you are working with people who are your friends, you need to have a contract in place that states exactly what you're going to be doing and how like you're going to be doing it, when it's going to be delivered, how much it costs, everything about it. You have to have it in writing, because if not, there guaranteed will be problems in the future. People don't live up to their word all the time, and because of that, contracts really stop that from happening. So I recently got a word, I call it like a word offer, that someone wants to work with me for X amount of dollars, right, for this month, for 30 days. The way I do my system is I record video for 15 hours for that person, so they can pick whatever 15 hours out of the month they want to do. And once I'm done with the recording, I'll edit it, whatever, but they just know that they have 15 hours a month they can use to record any type of content that they want to record. If they want to do, pictures aren't included in that, but if they want to do like a personal video, we can do that. If they want to do their own little show, they can do that. I'll record it, I'll edit it, that's fine. But I have to make sure that everything is stated very clearly in a contract. So I have up the contract that I have. I can't show you the contract, obviously, because I just can't do that. If you want, if you're interested, like, I can't. Not only is this a contract that I also paid for the template myself from someone else and modified it myself, but it's got personal information in here, obviously. But I can still read through like some of the stuff, and I'll let you know kind of what was very important to include into it. If you really want to know like or see the template, then hit me up and I'll show you like the templates or some stuff. I'm not going to give you all the templates and stuff. The guy paid for it, so I just refer you to his stuff. All right, we don't want to steal stuff here. But some of the most important stuff in the contract for this like subscription style service is how like the amount of time. So I said 15 hours of filming per 30-day cycle. The way I structure the payment is an initial payment, and then every single week they pay you in increments of whatever's left. So let's say they pay you like $10 until you reach the $100 limit, whatever. That would be ridiculous. That would be a month, but they just pay you initially, and then they keep paying you as they go on, so they don't forget about it. I state like how they can pay me: Cash App, Venmo, Zelle, cash, check. I don't care. How long they can use the media for. If there's any restrictions on the media, I know some people like don't want their media to be used for some different stuff. Like I don't really care, so I say there's no restrictions. A big thing is like how, I guess like you have to make this as clear as possible to the person who you're dealing with, and this is kind of annoying because I don't think people read contracts a lot of the times. They just kind of sign it and move away. But one thing, like, the client can only request a maximum of 7 hours of shooting per week. Like, obviously I have my own life. I can't just shoot 24/7 for you. So 7 hours a week is what you can request. Any person or anyone in the videos, I can use the videos for my own stuff. So if I'm on shoot and we're shooting like you and your, like, I don't know, grandson and your kids or whatever, I can use that to promote my videos. I don't have to get them to sign like a model release. them signing this contract is saying to whoever's signing it that these people have already agreed to be used however I would like them to be used. That's another one too. Like anything that I record, I can use to personally promote myself. And then one of the biggest ones too is anytime this is used, they have to tag me or tag my Instagram, which is JRJ Imaging, on social media, unless like I explicitly state, no, you don't have to do that. So this is like an example of the stuff that is very important to keep into this stuff, these contracts, because it's just stuff that you, I guess, don't think about. And then when the time comes and you're like, all right, I can't really tell them to do this, it's just important to know that you have everything out in like this document, that they signed it, and you're good. Only thing I will say though is that when I created this document, it's between me and the client. I'd rather it be between my corporation or JRJ Imaging and the client. But I have to still create basically the entity for this this business first before I can actually have like, I guess, a corporation behind it. So right now it's just between me and her, but I'd like it to be between my business and the client at some point, which is going to come up soon too. I just want to get this certification too, but like you were saying, I'm just working on that as I'm going through. But that's basically a little bit about the importance of like contracts and making sure you have like good stuff in your contract. It's not just a bunch of like foolishness. You want to make sure you're clear and concise, as clear as possible, like numerical values for everything when you're doing this type of stuff. And then the last update I have is that I just want to learn how to edit a little bit better on Final Cut Pro. I think my editing is pretty okay right now. There's a lot of stuff that I don't use and a lot of stuff I don't know how to do. But since I'm editing video so much, knowing how to edit video as fast as possible is very essential. So there's like mini shortcuts and stuff like that you can do to make your time of editing easier. But right now it probably takes me like 2 hours to edit 1 hour of shooting footage. So if I'm shooting for 15 hours, it's going to take me 30. So that's 45 hours total I'm working. And yeah, I just want to make sure I'm like being as efficient as possible in that time. I have other stuff to do, so got to make sure my time is being used to the best of its ability before I start like bringing other people into this as well. But yeah, that's really it. Week is going by very well. I got some shoots I'm going to go on in the next 3 days, which is awesome.
Word. That's dope.
Yes, sir.
I feel like I was going to add something, but I forgot. What was I going to say?
What were you going to say about the thirsty thing?
I was going to do a throwback to when you were talking about filming for that lady.
Bro, stop.
I'm just saying.
Oh, she hit me up actually. So
I know, that's why you're thirsty.
That's crazy. She hit me up again. She hit me up today and she was like, yo, when are you free to record? So now I get to record with her next week and see if she likes my stuff, which I hope she does, because I'd love to.
You love to what?
For that reason.
You love to what?
I love to film for her. Bro, you gotta stop. Bro. She's going to listen to this podcast when I tell her that. Like, yo, just look back on episode 12. But yeah, no. I'm happy to be working with her. Okay. And anyone that's providing me with work, I appreciate it. Dang, you hungry?
Dang, bro, leave me alone. Let me live my life, yo. All right. Do you want to get into technical analysis now?
Yes, sir. Let's share the screen.
I'm actually kind of feeling away, though, because I swear there was something else that I wanted to bring up.
Was it about my update or about something else?
No, it was something. Oh, wait. Hold up. Did I just remember it? Oh, yeah. So before I share my screen, I forgot to mention, I'm actually going to, where is it? Cincinnati, Ohio, this weekend. I literally just booked everything yesterday.
I was going to say, that was a very quick thing. Like, I saw it. I was like, dang.
Yeah, bro. But I'm going for, if y'all know about the FIRE community, financial independence, retire early, or whatever, like that community. So they're having this conference. It's called Economy. So it's like the word economy, but instead of at the end MY, it's ME for me. Yeah, you see what they did there?
That was nice.
Yeah, it's kind of cool.
Nice.
But yeah, so in a rental property course that I took from like someone that's like very popular within the fire community. Her name is Paula Pant from the Afford Anything podcast. So I took her rental property investing course, and like they have their own mastermind meetings there, like virtual ones. So 2 people that I was in a mastermind with, like her, the girl's name's Nicole and this guy Greg. We were in a mastermind together. So both of them said that they were going in the last virtual call that we had. And I was like, oh, I don't know, I might go. I already have like vacation time from work like during that time period, so maybe I should. And yeah, I ended up just deciding to do it because I don't know what else I'm gonna do. I had to take vacation anyways for work.
Wow. Okay.
But yeah, another thing I forgot to tell y'all a while ago. You should have reminded me, Joel. We didn't tell him that I met my goal for the year, bro.
Oh, yes, sir.
Yeah.
That's not my place to tell him. That's your place.
I know, but you could have reminded me, bro.
That's true.
But yeah, so typically I'm trying to double like what I consider to be my real asset column every year. So that means like counting my cash, my investments, and everything like stocks, crypto, everything, and any equity that I have in properties that I own. So my goal for this year was 200,000, and I actually surpassed that. Probably primarily because of options recently. Because a couple weeks ago when I was at that other conference in Orlando, that was in October, I wasn't there yet. I was at like 195, I think. And I think last time I checked, I was at like 218. I don't know. It could be a little bit more. It could be a little bit less. I have no idea right now. I haven't checked. But my net worth.
That conference was how long ago, though?
That was in October.
So that's not even a month.
Yeah, that's what I'm saying. It has to be like 3 weeks.
That's very awesome. That's awesome.
It's crazy. Yeah, I was not expecting that. I'm not gonna lie.
That's
couple
like
months ago,
someone's like salary right there. Like, you know that. Like that's like a poverty. Like you just made the poverty level in 3 weeks.
Yeah, right. I mean, that's what happens when you own assets, right?
You're not poor. Yeah, you're not poor. Right.
Yeah, like that. That's why we do what we do. You know what I mean? Because I really didn't do that much. Like not a lot of it, but it's like obviously I have money in the stock market. Like that just moves. I don't do anything for that.
Absolutely moves.
Yeah, and then in options, it's like I gotta find my entry, and then I just buy it and I wait. So same thing. You know what I mean? But yeah, this is definitely the power of owning assets, and that's why you got to do exactly like the things that we talk about on this podcast, so you can go ahead and make someone's annual salary within 3 weeks.
Within 3 weeks, yeah.
That's actually damn near my annual salary from Citizens, to be honest.
Stop. That is crazy. No, that's just wrong.
Yeah, but so my net worth is at 200,000 now, as well too, which is dope.
That is awesome.
So next year, like technically, the goal should be 400,000, by the end of the year. But I'm not extremely focused on that, in the sense that what's more important would be for me to have more like passive cash flow coming in, and I prefer to have that through a business, rental properties, things like that. So that's why the Airbnb thing is so important.
A move.
Yeah.
Yo, so that makes me think though, like, would you be willing to take like a significant financial hit if it meant you create a bunch more money? Like, would you be willing to miss your like $400,000 goal? Let's say you get 300, but you have like 4-5 rental units.
Yeah. All day.
Next year, yeah.
Yeah, but that's.
I know sometime.
Go ahead.
Because I was gonna say, like, I remember when you were buying the property, like, bro, like, I'm spending so much money. I'm like, yeah, but you're gonna be making it back so quickly, and like, I know it still hurts to like see the value go down. And I know you were like, yo, I'm stressed because I'm not trying to not have this money in here. Like, it's like, yo, this is my baby, basically. Like, you're losing it, but it's like for the better. It's interesting.
Yeah, so I remember
like
these are kind of like the mental shifts that you have to go through along your financial independence journey. Because originally, like, especially with my original plan, and you talked about it like just on your YouTube channel about the 4% rule and all that. So that was all about like like putting money into index funds or whatever. So that's when like certain dollar amount goals like that in terms of what you have is so important. Because for example, if you want to be financially independent off, just to make numbers easy, like $40,000 a year, right? You would need $1 million portfolio, and it's going to generate you like 7 to 10% a year, but you would only live off 4%. And you would essentially be able to live forever like that, as long as your expenses don't reach up a lot.
Which is shit, and I feel $400,000, like, that's a lot of money to be getting a year. I think you'll be fine.
No, I'm saying 40,000.
Oh, 40,000. Oh,
yeah. If you have $1 million portfolio and using the 4% rule.
Yeah,
which you can do that easily outside of the U.S. Really and you can do that. I don't know. Some people wouldn't be extremely comfortable. Chill. Extremely comfortable in the U.S. depending on where you live. Of that, but also if you're house hacking, you don't have a housing expense and things like that, then it makes it significantly easier. But I was gonna say also that I can argue not that I'm financially independent per se, but that I'm at least like financially independent enough, and definitely location independent, like because of options trading, that even if I didn't have this property, like say I was still living at my mom's house or whatever, if the world was open and I could move to Bali right now or Thailand, which maybe I can, maybe I should look more into it. But I could probably live in countries like that and just trade options and be straight. So the fact that I still have like a large index fund portfolio, I still have like 25 or 26,000 in crypto. I still have this property and I can rent my unit when I leave, and I'm gonna be buying more, like whether it's a short-term rental or whatever. I don't know. I feel like it's a really
you feel good, right?
Yeah.
Yeah, you feel
great time
good.
to be
Like,
alive.
you know what?
That's how I'm feeling.
Life is not that stressful anymore.
Yeah, I mean it kind of is because of other reasons, but I'll talk about that soon though, because I'm reading this book called The Gap and the Gain, and it kind of discusses like how really successful people like have that mentality where like they're never happy and they're always stressed because they're focused on like the next goal versus fully appreciating everything that they've already done. We'll talk about that later though. But,
that's a good one too.
Huh? Yeah.
Let me just write that down so I can put the people on. But yeah, that reminds me, Noah, of the cash flow framework that you sent to me. I don't know if you want to talk about that in this episode, but I think that was extremely, extremely helpful, and I'm gonna basically completely base like how my money's gonna come in from this like photography business thing.
We can talk about it next week because I still have to look at it more in depth too. Someone in another group chat I'm in just sent that to me, and I thought it was cool, so I sent it over to you real quick. But yeah, so
it's called the.
No, go ahead.
You said it's called The Gap in the Game.
The Gap and the Gain.
Okay, The Gap in the Gain. All right.
Yep, and it's from the same people that wrote the book. Excuse me. Who Not How, which is a super gem. Y'all should definitely all read that. But yeah, so real quick, going back to like having to make like a mental shift, and that's why that board game Cash Flow from like the Rich Dad Poor Dad company or whatever is really helpful, because in that board game you really have to buy assets that are producing like real cash flow that's actually like coming into your bank account every month in order to like win. And that's like so different from like how I kind of play the game in real life, because in the game you can also buy stocks, and a lot of times it's like I'll just have mad bread because like I own mad stocks in the game, and I'll sell for like a huge profit or whatever, but then it's like I'll have trouble like finding a place to like actually park the money in order to produce the cash flow that's going to get me out of the rat race. So having enough cash flow to cover, like passive cash flow to cover my expenses. So that's why I need to make like a mental shift now, especially because how I always talk about like, oh, I don't know if I have enough money to like do this move or do that move. And you're like, bro, you definitely have it. Like, what are you talking about? Yeah. But I'll feel away because I'm like, oh, I don't know if I want to take from like my index fund portfolio. I don't know if I talked about it last time or on another episode. But that's also something I had to get over because I have like an extreme fear of betting on myself. I feel like
that's crazy.
I talked about it before. No, I remember now. Yeah, so that like typically what I do is I just tie like my wealth to assets that I know are gonna do well over time. So I can just be trash, but it doesn't matter because I own this stuff that's like doing very well. And that's not the worst strategy in the world, but I can just grow a lot faster if I was willing to take on more risk and kind of bet on myself and my skill set more, and the teams that I'm gonna put in place as well.
I don't know, dude. I think you should definitely bet on yourself. From what I've seen, you're not a very I'm just gonna go do this and not looking like that's not really you. So any outlet I see, like you obviously use courses to help you take the knowledge from other people first, but implementing it into your own way, I'm sure would be successful. You definitely seem very.
I hope so.
Like you're logical, huh?
I said I hope so.
Yeah, bro, you're logical enough to make good decisions, clearly. So.
And one more thing before we get into technical analysis, but something that scares me about that too is people always talk about like in their journey about having like huge losses and all that, and I've never once ever had a huge loss. Like I've never made a huge mistake or anything. The only mistakes, like the only like bigger mistakes that you can really qualify is just like opportunity cost stuff where it's like, oh, I mean, I could have made this investment instead of that one. But I've always kind of just been on like the right trajectory anyways. So I'm still like okay or extra decent. But yeah, so I just wonder like, all right, so when I finally kind of step out and do my own thing, like, is that when I'm going to take this big L and am I going to be able to recover from that?
Probably, but you probably will take an L at one point, but who cares?
No, I'm saying like a huge L though.
All right, but I don't think an L would take you out the game. I don't think you'd even put that much money on the line to get, or you think you might like. No, I don't think so.
Like I don't
think it'd ever take you out the game, bro. Nah, because I don't think it would. I think people talk about their big losses like, wow, that sucked. But I feel like they always learn something about that continues to help them. Like, if you're scared to make mistakes, then won't you literally never grow? Isn't that how it's supposed to work?
Yeah.
So, like, I really feel like if you take a L, you don't have the type of personality that would say, dang, like, I just lost this money. I guess I'm done. Like, that, I don't think that'd ever come from you.
No, that's true. Yeah, I can never be done.
That's what I'm saying.
But yeah, and just last thing real quick. So how I try to get around that most of the time, like the whole mistake thing, is I just keep trying to learn from other people's mistakes so I don't have to make the same one.
Yeah.
But yeah, I don't know. I still just have that fear like in the back of my head that at some point I'm going to make a huge mistake.
I mean, that's definitely good to learn from people's mistakes. That's the number one thing. Maybe that's why you don't really make mistakes.
Yeah, that's what I'm saying. But then I just wonder if I'm playing too safe. But it has been working out okay in my standards so far. But yeah, we'll see over time. But tune into the podcast to find out. Stay tuned.
Yeah. Next week, bro. Lost 30,000.
Chill, bro. Chill. Imagine.
That'd be sad.
All right. I don't know if you want to talk for a second so I can set this up because.
Talk for a second about what would I talk?
No, it doesn't even matter. I'll do it at the same time. All right. So I'm gonna share my screen.
I really like this cat flip.
All right, can you see my screen?
Yes, sir.
All right, word. So I'm on TradingView right now, and I'm going to show y'all just a couple of different tools that I use when it comes to technical analysis. And by the way, a lot of the stuff that we talked about last week when it comes to fundamentals, that doesn't apply as much if you guys end up being interested in option trading and you decide to just trade ETFs instead. You don't have to like do as much of a deep dive. Although, I mean, it would definitely be helpful, especially if it's not like a true index fund, because you might want to like really keep up with the companies in that particular ETF to make sure that they're doing well. But I'm gonna only have the S&P up here for today. So, actually, let me put on one more indicator before I even begin for real. Alright, so in terms of finding entries, you can use moving averages. I typically use exponential moving averages, but there's not really that much of a difference in my opinion. But the standard ones that you'll hear from traders are the 50-day EMA, so the 50-day exponential moving average, and the 200-day moving average. So typically, especially for an ETF, the 50 holds up pretty well. By the way, I don't really use the 50 like that. I use the 72-day, and the only reason I do that is because Ian on that show, Market Mondays, he said that the 50 is okay, the 72 is better, but the 200-day is really one where you kind of load the boat in terms of like, especially if the S&P hits the 200-day moving average, which it doesn't do often. That might be a really, really good entry to look out for. But
so what is it?
Go ahead.
I'm gonna ask you a bunch of questions because I don't really know too much about this. What is that? Like you said, moving day average.
Moving average.
Yeah. What is the moving average?
So I hate explaining technical indicators because they're so annoying to me. But basically, it's tracking kind of like the movement of the stock over time.
Okay.
So 50 days, obviously, it's like
yeah.
All right, so I don't even have to explain what that word.
Yeah, that makes sense. Yeah.
Yeah. So typically, in terms of support and resistance, because you'll see a bunch of traders like mark a bunch of lines on their charts for support and resistance. I don't really do that, although maybe I should. I typically will use stuff like, for example, moving averages and Fibonacci, which I'll show in a second, Fibonacci retracements specifically, to kind of mark areas of support and resistance. But support and resistance kind of, I feel like it is what it sounds like in a sense, where support is where, for example, the stock price will find support. So, for example, over here, what date is this? Does it show it on here? I think it does at the bottom, but this thing is in the way. So, for example, this is May 12th of 2021, where the S&P hit the 50-day moving average, and you can see over time, it will keep hitting it, but it's finding support in this area. So it's keeping it like held up. But you have to remember that once a stock actually breaks through, that moving average or that level of support will now become resistance. So as you see over here on September 17th, it ended up closing below the 50-day moving average, and then there was a big gap down. So now the 50-day moving average is no longer support. It's going to be resistance until it goes back above it. So that's why you see on September 24th, like around this time frame, it hits it and it can't break through. So it jumps right back down and tries to do it again a couple times before it actually breaks it. And then, so you guys can use this for stocks, ETFs, or whatever. It doesn't really matter. But the 50-day is typically a solid entry point. So even when it does break it, sometimes like it won't really break it like that bad. You know what I mean? Like it didn't fall too far below the 50-day moving average. So this is why I like doing leaps when it comes to options, because I'm buying so much time. So typically I don't necessarily get like the best entry in the entire world. And like the farther that you go out, the less precise you really have to be as a trader. So as long as I'm in a decent range, I'm good. You see what I'm saying?
Yeah.
But I'll scroll back so you guys can see a little bit more data when it comes to the 50-day. But you see over time, like it keeps hitting it and bouncing right off. That's why. Do you see what I'm saying?
Yeah. When do you hop into these trades then? When I know you said like the time, because you're buying so much time, it doesn't matter. But what's like what in here? Do you hop in when it reaches that point right there? When it reaches the 50-day moving average?
So I use a couple different tools. As a trader, they call it like confluence. So I'm looking at multiple things before I really make a decision. But the 50-day is one of them. I'll also, like, you're gonna have to wait to see Fibonacci retracements after the fact to understand what I'm talking about. But the 50-day is one that I use, but I won't use it if it's still basically at an all-time high. So another thing that I look at is I really want to get in more towards like correction period. So if the S&P is down like near, for example, like 5 to 10%, especially 10% with the S&P, I'm also going to take that into account. Like if, like, for example, right here, February 17th, right? If this was an all-time high right here and then it just fell right there to the 50-day, I don't know, like I might enter, but I'm definitely not dumping the full clip. It wouldn't have been a bad idea because as you can see over time, it ended up rising way above that. I didn't even come back to it ever. But I still might be scared just because it's so close. You see what I'm saying? So you have to take multiple things into account. It's not just one thing.
And it could break past and take a while to rebound.
Yeah. But just to give more data, right? So over here, like it ended up breaking it pretty bad. It still didn't get down to the 200 days. So that's how you know, like when it comes to an ETF, if it hits the 200, that's kind of a big deal.
So how bad is that if it hits the 200?
So
like
the last time it broke was like March 2020. You see what I'm saying? And look how bad it fell, bro. That's insanity, bro. That's crazy. So imagine having a short-term position on this versus having a long-term position.
Yeah, or like, hey, I mean, this sucks. It's really bad, but hey.
Yeah, and then
looks nice. Imagine
also not using a stop loss to lock in profits, because some of the people that I follow that were like teaching me options, like they don't like, because they're doing leaves, they kind of don't really care sometimes, or like at least some of the people talking about, they didn't really care as much to use stop losses, it sounds like. So they weren't locking in profits along the way, so they might have been way back, like got a really good entry, like maybe way over here or something like that, back in 2019, or August of 2019, for example, and rode this thing all the way up just to have it tank in March of 2020. So that's why I like to lock in profits along the way. And this is also why I like to have multiple portfolios, because like you'll always hear, especially in the fire community and all that, like, oh, you can't time the market and all that. So that's why I like to kind of like hedge in a way. I feel like that there's another term that I could use as well, but I can't think of it right now. But it's like, I'll have, for example, an index portfolio where I'm not trying to time the market. I'm just gonna buy every week, whatever, and just let it run, do what it does, right? So I'm betting on the market to do well over time. But there might be another portfolio where like I'm kind of willing to take the risk for a larger reward. So there is a potential, for example, that maybe I get stopped out over here in February 2020, like going into March, but then I end up buying in at a low. I highly doubt that I would have timed it exactly at the bottom, but I would have waited for what they say, like they call it confirmation. So as I see it moving back up, like maybe over here, over here, I would have probably tried to re-enter as I see it climbing back up, because I don't think I'm ever going to really be able to time the exact top of the market and the exact bottom, but I don't need to in order for me to do well over time. That's just something
I think that's a huge point though too, because I think people always are trying to figure out when the top and bottom are, but if you don't care about that and you're really just trying to get, I guess, confirmation that at least the market is trending in this way, it gives you more of like, it's not really gambling anymore, it's more like technical analysis. I guess that's crazy.
Yeah.
It's really technical analysis. So you can kind of tell with some like assurance that you're doing well.
Yeah.
That's a great method. And I've never seen this too, by the way, for anyone watching. Like I don't even understand what I'm looking at. I do now, but that makes a lot of sense, like logically in my head. So that's awesome.
Yeah. Damn, there was something else I feel like I wanted to say before that though. But yeah, as you can see, it doesn't, the S&P doesn't really hit the 200-day very often. And typically when it does, it's like, it's just a really, really bad time in the market. Like this is a serious time, which is hilarious because the other day, like you weren't outside for this either, bro. 2018, bro. I was outside for this, bro. I was here for this.
I was not here.
Like,
wait. What's going on with the 50-day? So the 50-day crosses over the 200-day. That makes sense because
it crosses below.
Oh, that makes sense. Crosses below, but that makes sense though because it's shorter, and so the average. That means that the average of the 200-day is higher than the average of the 50-day.
And that's
right?
That's a bad sign. That's what they call
that's a very bad sign.
Bearish sign. So I won't say bad because you can make money on the way down, especially
it looked like
for option traders.
Money on the way up.
Yeah. So typically, if the 50-day goes below the 200-day. That's a bad sign, and it means it's probably gonna like keep going very low. Jeez. But once it crosses back above it, that's a bullish sign, saying that it's probably gonna rise again. So that's something else that you guys could look into as well. But yeah, I was outside for this, but I'm bringing this up because someone had said at the like networking event thing that I was at on Tuesday. He was like, oh, yeah, like, y'all have never been outside for a correction. I'm like, yes, I have, bro. I've been outside for multiple corrections. And this was during the beginning of my index fund investing journey. And I was like, bro, y'all told me that I was going to get 77% a year, bro. What is this? All I see is big red in my portfolio right now. I was low-key tight. Like, I was very much a newbie at the time. And I think at this time, it was... we were going through like the tariff thing or something, like Trump with the China tariffs, or I don't know, something like that. So, some sort of like economic issue. And I was like, bro, I don't know what's going on, but y'all told me I didn't have to pay attention to this stuff and I could keep buying the market. And I don't know how I feel about that. But I continue to do it anyways. And I mean, if you look at the charts or if you look at the percentage return during that time period.
If you look at my portfolio right now, you'll know that it worked
out. Clearly it worked out. Which is why, if you guys, like I said before, if you don't want to take the time to do all this analysis on individual stocks and you want to still trade options, you could literally just trade the S&P. And to be honest, I might just start doing that. I might trade the S&P and I'll trade, for example, like a technology index or something like that, and just other ETFs, so it doesn't take as much time, especially if I have like so many other things going on. Like if I'm like, nah, I need to spend all this time working on short-term rentals, like I'm just not doing research on individual stocks right now. It's not happening.
So, question then for you.
Yep.
If you're gonna trade the S&P 500, given its like crazy good track record, does it not really matter when you hop in, especially since you're trading like you're gonna go to 2024, 2025? Like, can you just hop in right now at whatever price? Who cares? And just hold it, wait till it goes up?
So, I feel like the general advice is always that don't get in at an all-time high. Excuse me. Wow. Don't get in at an all-time high. So I feel like
which we're at, though,
to be safe, I would still want to get in around at least like a 50-day moving average, or like what would be better is like a 10% correction or 5 to 10% correction. There's also just certain time periods where the S&P usually drops anyways. Like I think like February and March is typically a bad time in the market, and September is typically also a bad month. So actually I can show you guys this too, now that I think about it. You guys can look at seasonality. So we'll put all these links like we do usually in the description. But actually, I'll just
and the links to any like book that was mentioned too. So you got like the E-Myth Gap.
Yeah, exactly. So you can kind of see like the trend, like the months where like you can use this for stocks or ETFs, like where typically it does well and typically it doesn't really do so great. But yeah, and this is tracking it from like the last 5 years, so 2017 to 2021. Actually, that's 4 years, right?
2017 to 2021.
Yeah, that's 4 years.
Yeah.
But yeah, so these are just other things that you guys can take into account. So if you see, for example, this is a percentage of months in which the SPY, so the S&P 500, closed higher than it opened from 2017 to 2021. So you see here, April is typically a really good month for the market. June and July, typically pretty good months. November is typically a pretty good month. So it's probably going to continue to rise. Whereas you see over here, like September and October, don't really look the greatest. It only closed higher than it opened like 60% of the time during that time period. So you can kind of time your entries around that as well. So I would say it's not, oh my gosh, I hate this. Like, I guess you technically can enter whenever you want, but I just personally wouldn't, especially with options, because if it starts tanking immediately, like it's also just the psychology behind it. Like if you might just start freaking out because you're like, dang, I know I didn't get the best entry, and now I see like my account dropping dramatically because of how volatile it is. So I feel like you'll just have more confidence if you did try to get in closer to like a more intentional approach that you use or whatever. But just another like tool that you guys can use as well is called RSI. So the general rule for RSI, and that stands for Relative Strength Index. So it's typically trying to figure out whether a stock is overbought or oversold. Meaning, if it's overbought, that means it's kind of running too hot right now, and it might pull back. And like the default for RSI is around 70. So they say like if it's running like towards 70, then that's when it's getting into overbought territory. So you might want to expect a pullback. Whereas if it's near 30, then it's getting oversold and you should probably expect a rebound. They say RSI isn't necessarily the best indicator, but it's definitely something that's helpful. And as you can see here, like once the S&P went past 70, it lasted for a little bit and went up to 76, and then it kind of pulled back a little bit. So y'all can keep monitoring that to see how it goes. And I don't think the S&P hits 30 very often. But individual stocks, cool. you definitely see a lot more price movement. So be mindful of that as well. So I'll also say what might be a little bit better when it comes to RSI, because some of the gripes about it is sometimes a stock can stay in like overbought territory if you're using kind of like that 70-30 rule for a significant amount of time. And same thing with oversold. So people sometimes prefer to use 80 and 20 instead of 70 and 30. And what's it called? You can also just like look at the general moves of that particular investment that you're trading to see like, all right, so typically when it hits over here, like this might be a level of resistance or whatever, just as an example, like anytime it hits like this price range, even if it's not within that 70-30 or 80-20 range, it might pull back or it might rebound from it. So you can utilize that as well. One more thing, actually I have two more things for y'all, but another one that you guys can use is Bollinger Bands. So this is also kind of like a moving average type of indicator. So typically when something is hitting the top of the band, that means it's probably going to pull back soon. Whereas if it's near the bottom of the band, it's probably going to rebound. And typically it's going to stay within like this middle line area.
Average.
Yep.
What was that called again?
Bollinger Bands.
Bollinger Bands, okay.
And then something else that I really like to use is Fibonacci retracements. How do I get RSI out of here? So I'll show you guys how to use that. Since I'm trading like longer term, I like to use the weekly chart because it shows me more of like the longer term trend. But when you're using Fibonacci retracements, typically you're going from like the low to the top of like one particular wave. So for example, so you guys can see, like, this is really going to be helpful only if you guys are viewing the video. If you're just hearing me, you're probably not going to understand when I'm talking about waves. But for example,
hey, but it's a good thing though that we got the videos on YouTube right now.
Exactly.
In high definition. Check it on YouTube.
Facts. But yeah, so like this right here, like September 27th, like this time period or whatever, to over here could potentially be considered a wave, right? There are other ones that you can use. You can go as far back as you would like. But just as an example, I'll go from here to the high point. We're still kind of in this wave, but... And what Fibonacci retracements will do, I'm going to bring it back to the daily chart, will show you kind of like another example of support and resistance. So it's saying the retracements are where is a stock going to retrace to once it starts pulling back. So this is saying right here that the next level you should look out for is 460. That's where the S&P might find support. But if it breaks through that support, the next level you might want to look at is 453.82. So you can kind of track like the movements of a stock, for example. But the big ones to look out for if you're looking for like a strong pullback is the 0.5 area and the 0.618. Those indicate like really, really strong pullbacks. So that's just another way to find a good entry. So for example, if the S&P drops down to like between 443 to 448 based off the fib levels that I pulled, that might be a good entry for you. And you can combine that. This is what I was saying about confluence with other indicators. So let's put back on some of the moving averages so you can see. I probably really only need one of those. Let me just get rid of the other one. Oh, yeah, so that was kind of perfect. So the 50-day moving average is near, it's in that range of the 443 to 448. It's actually at 447 right now. So that's what I was saying about confluence, where you have like kind of multiple indicators telling you the same thing. So you might have more confidence getting into a trade in this range because it's like, well, my Fibonacci retracements is telling me that this might be an area of support, as well as a moving average right here. And you can also look at RSI and the Bollinger Bands and things like that. So that's why I'm saying, like, I'm taking multiple things into account, just like with the fundamentals, I was looking at multiple analyst reports, multiple analyst price targets, reading articles every day for like a bullish and a bearish case on like whatever stock I'm looking at. So just taking multiple things into account. But I would say that's basically it.
Wow. Really just it's crazy because like you said, like the stock market's just based on people's feelings. So that was just like a technical analysis of people's feelings over time. Is how it feels like in my head, bro.
Yeah, and I feel like the reason that technical analysis like might even work is it's kind of like a self-fulfilling prophecy in a way, where it's like you have all these different traders, probably like including institutions, that are all looking at the same charts using these same exact indicators. So it's like it could be just like we all believe that this thing has support when it hits this. Like when it hits this moving average. And since we all believe that, we're all pumping the stock at the same time. And we might be like, oh, it's oversold here, so we're all going to sell at the same time. Like things like that. So that's why, I don't know if we got that part on camera, but I thought it was really funny when someone made the joke that like technical analysis is really just astrology for men.
Nah, yeah, that makes sense to me. Now I understand that joke.
Yeah.
Wow. And yeah. Well, I mean, we're making money with this, so I don't think any Sagittarius is making money doing. Oh, but they really are though. Whoever made cosines a genius.
I mean, I'm a Sagittarius and I'm making money, right?
That's crazy. Wait, what's your birthday? Oh, December.
No, sir.
No, all right, never mind.
Sir. I don't know if I want to release on the pod, but I don't want people saying happy birthday to me. I don't be liking that for some reason. On my birthday, I'm just like, yo, leave me alone, bro. I'm weird.
That's valid. Okay, all right, word. So if you want to view, I guess that's gonna be in a shorter clip. If you didn't view it if you listened on audio on any podcast platform, make sure you check out what we just showed you, because that was a lot of information, and I don't know how you'd possibly follow that through audio. I don't think we did like the best job. There's not a chance. So definitely take a look at that. But I think that's all we have for you today. I don't think we talked about what we want to do for next week, like updates.
So you can trade any, like, I mean, not any asset, but you can trade basically any asset using those same that same set of technical analysis. Like that applies to crypto, that applies to forex and all that stuff. So
oh, you mean like that? Okay.
Yeah, like the same indicators and things like that, same moving averages. They apply to everything. So just another thing to keep in mind.
That is good to know. All right, so for next week, I think what I'm trying to really work on and get better at, I'm not going to get the supplies for like the shirts and t-shirts and stuff for this photography thing for a while, which sucks. But I want to get the logo completely, I guess like completely made in patches, so I can just replicate it quickly and then just put them on shirts when I get them. I just want to I don't know, I guess it's just making money. I'm in grind time right now, so I don't really have too much updates on that, but I still want to keep posting content on social media. I think you've seen the content I've been posting on social media. I'm trying to stay like very, very, keep people in the loop on that. And then I don't know if it's going to happen next week, but I am going to continue my own personal YouTube channel, specifically on what I'm doing with the photography stuff I do. It's just too good of a way to make money in the future, and it's also like something I want to do and have like the equipment for and the want to do it. So hopefully you see something by next week on that.
Word.
How about you though?
For next week, we're sitting down with that lender. That's like the one thing that's most important.
The one thing, that's another book too. All right. So if that's all you have, we hope to see you in the next week's episode. Goodbye. I never know how to end these out.
Later,
I never know how to end these out, man. All right, we'll see you.